Imagine an ordinary day of work. It seems to be going by and there is just not anything new that is being said. We're expected to save through life and do nothing more than invest our money into the S&P 500. But in 20 years, you will then be a millionaire. So you put all of your life savings into a meme and less than a few months later, you become rich. In February, this happened to somebody who bought Dogecoin when it was worth just 4.5 cents. 69 days later, he was a millionaire with $188,000 of hard-earned money. This story has got to be one for the record books. Luckily for you, Nugget Lover, this may happen in real life as you watch this video and follow the exact same steps we are about to mention. So just in case the above scenario happens to you, we put this video together that might help you. We hope to give you some helpful ideas and advice from yourself or someone else who went through it. If you become a millionaire by investing in cryptocurrency, be sure to watch the rest of this video for some memes and funny moment clips. In this video, we will speak to Mr. Dogecoin Millionaire, as well as anyone who in the future is going to become a millionaire with crypto, Bitcoin, Ethereum, or Dogecoin. So this is a true story. We first read about it on Reddit, and then the news outlet Newsweek broke it, and then CNBC picked upon it. Respecting his privacy, we will not mention his name even though those articles already mention his name. Plus, we don't know how to pronounce it, so we're not going to try. Now, we know that he's 33 years old, and at one point in February, he spent $180,000 buying 3.9 million Dogecoin, which were valued at 4.5 cents each back then. So he watched the entire video, hit like, and became a millionaire. After all, magic happens when you watch our videos and subscribe to us. So according to the article, he lives in Los Angeles, California. He works for a music company, and he first heard about Dogecoin from Reddit, where we get our daily dose of culture from. So he was inspired by the idea that a meme, which started as a joke in 2013, could become as valuable as it did. And he also fell in love with the community. Dogecoin and Satoshi Saint Bets were huge inspirations for him in his own career. He doesn't have any disposable income to invest in stocks either, so he sold off his entire stock portfolio, which includes stocks like Tesla and Uber. And finally, he even invests money in margin, which is extremely risky, especially in the world of crypto, where money can get called by margins. If your prices dip below a certain threshold, all your positions will be liquidated. You would only want to take this type of risk if you have the tendency to be very aggressive and believe that the investment would increase in value massively. And he did believe because he had somebody to follow the man, the myth, the legend Elon Musk, who is known for tweeting about Dogecoin non-stop recently. He figured that he probably would pump in more. Elon did. So in the middle of April, when Coinbase went public and everything was going up, his investment became worth well over $1 million, which is pretty cool. In other words, he has a plan, and his plan is to not sell anything, certainly in the short term, until he earns $10 million in profit. This investment would be worth $10 million, at which point Mr. Smith will sell off 10% of that to his investors for $900,000, and the rest of the remaining $8 million will be left in Dogecoin. We have plenty of personal experience on mistakes that have been made in the crypto world. We are giving investing advice because some people don't know how to invest effectively and need help. If you're interested in what we would change, it's here. First, congratulations on saving $180,000. It's a great accomplishment to have accomplished that milestone. Maybe your 30s were tough, but the payoff at this age far outweighs the challenges. We've been there. Saving $100K when making just an ordinary income of $50K is quite an impressive accomplishment. It is a difficult task, especially if you don't make consistent savings. If you consistently save your money, you can easily invest it in $1 million. It's possible, but it will be difficult to make the money in just 69 days. And again, congrats on becoming a millionaire and joining the 7-figure club. But let's imagine this scenario. Let's imagine that Dogecoin drops back down to 4 cents. what do you do? In cryptocurrency, we have cycles. Statistically speaking, the next one is expected to happen at the end of this year or at the beginning of next year, when we're supposed to get a bearish trend. So that could very well happen in crypto. It's important to remember that we don't know how much money you make. Here's some scenarios to prepare for. Here's scenario number 1. As a hypothetical, let's say you make $50,000 a year. This is the income that you don't have any disposable income and had to borrow money on margin to get to this point. So we'll assume a baseline average of $50,000. Let me show you this interesting calculator. If you plug in your age 33 years old and what your initial investment is $180,000, and let's assume that you can put in $500 every month, which is equivalent of funding a traditional IRA account valued at $6,000 a year. At this rate, let's assume your income over the next few decades in traditional markets like stocks or real estate will grow at 9%. In this scenario, the inflation rate is 2%. If we want the return to be as high as possible, we want the inflation to be as low as possible. This means that our purchasing power doesn't decrease and we get a real return rate of 7%. In our view, this is very favorable. If you look at the central bank's current estimates, they are telling us that they want to have inflation at 2%. But if you look at anything outside of the consumer price index, which they use to judge their success, it's way higher than 2% in many cases. However, consider a real rate of return of 7%. If Dogecoin didn't double, you would have $1 million net worth when you're 50 years old. What are the risks of not becoming wealthy until you're 50? Are you a risk taker? Or would losing everything you have be unwise? But here's another scenario. Let's look at it from another perspective. If you earn $100,000 per year and you only make $1,000 a month in order to spend that on something else in the meantime, it would take 15 years until you're 48 before you see even a few $1,000s. For example, we would cash out 100% immediately. To do this, you have to consider capital gains and the time it takes for them to come in. As such, you can invest and then wait a whole year before collecting your earnings, meaning you avoid paying income tax on profits you made. However, the downside is that you would have to wait until February 2022 to sell your investment. By then, crypto might be on the decline and Dogecoin could go back to below 4 cents. That is not outside of the realm of possibility. Let's compare 2 scenarios. If you just sold everything and see how much in taxes you'd pay. So let's imagine that your whole Dogecoin portfolio was worth $1 million and your initial principal equity, or the amount of money you started with, was $180,000. The formula for computing taxes on sales proceeds from a stock sale is quite simple. To generate a quick approximation, presume that you had to sell all your stocks and incur short-term capital gains taxes in the state of California. The result would be that you would pay $391,000, which would leave you with a net gain of about $428,000 in cash and stock holdings. Even with the extra $180,000 that you started with, your net worth is still around a whopping $608,000. The person giving you the money could give it back at any time and still be very rich. Yes, but let's say you wanted to wait for those long-term capital gains rates because you wanted to pay less than taxes. In reality, you would actually save $134,000 in taxes, or roughly. This means that instead of having $608,000 left over at the end of your investment period, you would have around $742,000 left over. Even if you were to generate an income of $50,000 a year in Dogecoin and live in Los Angeles, it would take 30 years before you even reach the starting point. For example, say you make $250,000 in a year, which is equivalent of $500,000. If you save 50% of your income, it would be easy to end up with 6-figure savings before the end of the year. However, if you're confident it won't make you a lot of money, and if the risk seems appropriate because there are no guarantees that the investment will be a success, that's probably not going to be a big deal for you. Even if it fails, you can afford to take the risk. because the potential gain is likely worth it anyways in just a few years' time. The $600,000 sum allows you to pursue other careers at higher pay in a different state with more tax savings. The point is that it gives you more options for saving more money for your family. But let's say you're like, I'm a risk taker. So here's another scenario that we would consider. Let's say you don't want to sell any of your Dogecoin because you're super bullish about it. Okay, that's fair. Here's an example of scenario number 2. If we arbitrarily say that you originally invested $180,000 in this company, if we sell everything else but keep the equity you originally built up, then you would have a total of $370,000 to reinvest in the company. The tax consequences of selling stock in the first scenario would not change much because there is no change to the amount of capital gains taxes. If a company is selling part of their portfolio, the investor will continue to owe short-term capital gains taxes on any sales, and they will receive the money minus other costs like fees and commissions. So because you believe it could go to $10 million and you'll still make $180,000, from current levels, your $180K will be worth 6 digits, which is a ton of money. But let's say you're not interested in that much. So here's the third way we go about it, and this is as risky as that. Do it. The third way is taking the amount of your investment without accounting for any trading losses. So $180,000 could be technically just the principal investment or the seed money. The IRS should not tax this return because a return of basis should not be taxed. This way, we carefully select high ROI assets to take advantage of high gains. If we make a mistake, someone might go to the comment section and correct us. If they do, they'll be able to pin that comment to the top of our article so you can see it too. This could be frustrating for those that want to sell their profits in the future, especially if the cost basis decreases. The best thing about most of these investment options is that the risk is low. If you take the hedge route by investing $10 million, it's likely that your money will remain intact even after the stock market crashes. This is not a viable option for us because we want to make sure our hard-earned funds are safe. $50,000 a year can seem like a lot of money, so imagine you made $100,000 a year in today's day and age. In the event that you lost all your money overnight, something you could never afford to do, what would happen? Your life would be drastically altered with little time to recover. Speaking to a tax attorney or considering moving to another state is an option if you want to make additional gains on your portfolio investments. If you don't want to get that route, California taxes your capital gains in the same way as regular income. So you might consider looking for a state that does not tax investments. If you bought a house in, for example, Nevada or Texas, it's possible to save up to $89,000 compared to what would have been saved in California. The only issue with the plan is that if the computer is registered in a state other than the one you moved to, an exemption may apply and not let you sell your home and move into another state. However, if you make the effort to speak with a person that's not a YouTube celebrity, that person can guide you in obtaining the education. You can save as much money as you want by living longer in one location for 6 months. We think that our desire for ultra-conservative investment strategies has less to do with our feelings about Dogecoin and more to do with the knowledge we have of our uncertainties. In the first instance, if your net worth was $180,000 before this happened and you earn anywhere from $50K to $100K a year and live in LA, then we would seriously consider the first scenario. Even after paying a short-term capital gains tax of $608,000, would amount to a life-changing amount of money. We don't think we would risk losing the chance of making more money because if we invested $608,000 into the S&P 500 and 5% each year, then in 10 years, we will become a millionaire with VTI or VOO stocks if they make a 7% return per year. We could utilize this money to invest in the stock market and keep the other $108,000 for ourselves. We could use some of it as down payment on a house. With this level of investment, you have the opportunity to make a larger return in the future. The downside is that if the market doesn't go up and your currency doesn't appreciate in value, you'll be losing money due to inflation over time. However, if that doesn't happen, you could potentially see that money in the next 20 years after losing all your hard-earned money. It's not worth it? That's something to consider, but it might be best to leave now. Now, if you have a question, Reddit is the place to find answers. Reddit has millions of dedicated users who are experts in their fields, and they're willing to share their knowledge with others who are looking for help. That's it for this video, Nugget Lover. Remember to subscribe to our channel. And if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon.